It's showtime. Donald Trump in one corner, Jerome Powell in the other. It's a battle for the ages. Who is going to win? Trump wants to fire Powell. Powell says that he can't do anything to save the markets, the economy right now. We're going to get into all of that and more in episode number 52 of the Traders Podcast. So welcome everybody to the Traders Podcast. So grateful that you're here with me. And before we get started, if you haven't done so already, please smash that subscribe button as I push to 500 and ultimately 1,000 subscribers. I appreciate your support over the last few weeks as I work to grow the channel, and it's all because of you. So thank you so much. And in today's episode of the Traders Podcast, we're going to talk about the one and only Papa Powell, as I like to call him, Jerome Powell, the chairman of the Federal Reserve, and what their role is in terms of the economy and the markets. And why are we talking about Jerome Powell today? Well, he had a speech on Wednesday, and when he was talking, he had some interesting things to say about what is currently happening with tariffs and what the Fed's role could be with that. And what we saw was the market sold down. And while this was a choppy week in the market, we did see a significant move off of Jerome Powell's words. And we just want to take a look at what his options are to come to the rescue of markets, to come to the rescue of the economy, and why right now, currently, based on what he said, he is hesitant. There's no urgency for him to act. And it's important to understand this dynamic because it can have a significant effect on how markets move. And then when you factor in that the President of the United States is calling for the termination of Mr. Powell, it makes for really a soap opera in the markets, as if the markets aren't a soap opera enough. So we're going to get into all of that and more here today in the Traders Podcast. So let's dive right in. So it's no secret that the markets have been in a downtrend since February 19th when we hit all-time highs on the SPX. We hit bear territory, down 21%. And a lot of this, if not all of it, is event-driven as a result of tariffs and the uncertainty surrounding that in terms of what it means for bottom lines for companies, in terms of their earnings, their profits, and what it means for the everyday consumer. And so the question then shifts to the Fed, and can Jerome Powell save your investments, or is the stock market doomed to crash? And what I want to talk about is really why the Fed holds the key to this crisis, what Powell is planning, and what decisions we can see potentially over the next few months. And if we just take a look back at what has happened with the tariffs, it triggered a bear market, specifically the massive tariffs that were put on China. And we saw the S&P drop significantly. Really, all the broader markets dropped significantly. The QQQ, the Russell 2000, IWM. And what is happening is because tariffs are inflationary, they're going to drive up prices. They put pressure on consumers. And if they're going to increase prices, not just for what the consumer is spending, but what businesses are spending in terms of materials that they have to purchase, then the businesses are going to have to pass that expensiveness on to the consumer. So it's just a cyclical process that really hurts people altogether. Your common people like you and I to your businesses. And what has happened as a result of this is a lot of analysts, market analysts, economists are now pricing in the likelihood of a recession. And we're seeing some people saying that the odds for a recession are greater than 50%. And remember, I posted a video not too long ago about what a recession is. It's when we have negative growth over 2 consecutive quarters in GDP. And we'll be getting that GDP data here in 2 weeks. So we'll see if we get a negative number there. And then we would need the next quarter GDP to come in negative. So we're going to keep an eye on this. And here's the thing. Jerome Powell can step in with the Fed to intervene to help things and stabilize the economy, but there are risks involved. And that's what I wanted to talk about here today. So Powell, he's the Fed chair, and his role is to really provide leadership for the Federal Reserve. And what the Federal Reserve does is they set monetary policy that really guides the economy. And they have two objectives in their work, right? You'll often hear that it's referred to as the dual mandate, and that is stable prices and maximum employment, meaning low inflation. So what you're paying out of pocket for eggs, for vehicles, whatever, groceries, it's not a super high price. And on top of that, maximizing employment, making sure that people have jobs are available, unemployment's low. And that's what the Fed works to do through their policy. And right now, just to use an analogy with these tariffs that are coming into play, Powell is like a pilot who's trying to land a plane in a tumultuous storm. The tariffs are the turbulence, and the market is the passengers, right? So that's a good way to think of this. And the challenge here is that we're already coming off of high inflation from COVID with all the stimulus. And that's why interest rates were raised to drive the inflation down, and they have been successful. But again, tariffs are inherently inflationary. So they're going to put pressure on prices to the upside. And it's also going to slow down growth. So Powell is now in a position where this rate cutting cycle that has already started, if he continues to cut rates, if the Fed continues to ease rates and lower them, what is that going to mean for inflation that is now possibly going to tick higher because of tariffs? And so right now, if you look at the interest rates, the Fed has cut those over the past year, and there are more rate cuts that are priced in for this year based on what's happening. And as those rates come down, as that Fed rate comes down, what it does is it stimulates borrowing among consumers. And that could boost profits for businesses. It could lift stocks. And right now, Goldman Sachs is predicting that there's going to be more cuts coming, 50 basis points, and that could increase if recession risks grow. But what is throwing a fly in the ointment is that Powell doesn't know if he can cut rates right away because of tariffs. So what he is saying is he's got to wait to see what the impact is before any type of decision can be made. And so that just only adds to the uncertainty that exists out there that has investors and traders on edge. Without any type of uncertainty to know how these tariffs are going to impact the bottom line, how they're going to impact growth, how they're going to impact the consumer, you really can't make decisions. And what that leads to is just being in this state of almost like purgatory, where you're just kind of floating in the wind without any true direction. And so the Fed has that power to lower interest rates, and that could lift markets. It could help support the economy. But the dilemma is if they do cut rates, that can drive up inflation, which then could increase prices for the consumer, which is not a positive development for the economy. The other thing that the Fed has the power to do is by injecting liquidity or money into the economy, into the markets. And that's through something that is known as quantitative easing. So think back to COVID, the stimulus checks, the business loans that were giving. That was all providing liquidity to everyday people, to business owners, to markets, and it propped things up. And if you go back to 2020, when you had that 35% decline, that the quickest bear market in the history of the stock market, it got bought back up very quickly and ran to new all-time highs. That was a result of quantitative easing. The challenge with that is that it is inflationary as well. So the two tools that the Fed has at their disposal to help the economy, to help consumers, to help markets, they are both inflationary in nature. So when you have tariffs that are inflationary, and when you have the two tools of the Fed, cutting rates and quantitative easing, that are inflationary, it poses a very, very significant problem. So could the Fed just let the market crumble? It's possible. And right now, not being willing to lower rates, keeping them higher to protect against inflation from tariffs, this could impact consumers. They're not going to take out loans. They're less willing to take out loans. Just look at mortgage rates and what they are. And the mortgage rates are based off the 10-year, which is a little bit different. But other types of loans are based off of that Fed rate. So if you don't have people borrowing money or taking loans, that's going to slow down businesses. And that could deepen this bear market. And if you have a slowdown in growth as a result of that, as a result of those high rates, and if you have inflation ticking up, that is something that is known as stagflation. And tariffs will make that even more challenging. And the Fed might say, hey, we just can't do anything here. We can't make a move because it would negatively impact the American people. And then the other thing we got to factor in here is this political pressure, the battle that's going on between Donald Trump and Jerome Powell, and referencing his Truth Social post when Trump said that it's time for Powell to go, that he needs fired, he should be terminated, that he should be cutting rates. And, you know, there's the Fed is supposed to operate independently from the government, right? And in an ideal world, that is probably true, but Powell has to be feeling some of that pressure from this current administration. Now, will that force him to make a move? Who knows? Nobody knows that. Nobody knows the conversations that are happening behind closed doors in relation to interest rates. But this pressure can undermine the credibility of the Fed, or if the Fed is feeling that pressure, it can force bad decisions. And so it's going to be interesting to see the Fed's response here over the next few weeks to several months in terms of how they react and how they respond. So what's next for Powell and the Fed? And again, they're watching, they're waiting, they're being patient. We had the 90-day pause on tariffs announced, except for China, and we're starting to get economic data coming in. The Fed wants to see that data. It wants to see how the tariffs are impacting things like inflation, your CPI, your PPI reports, your unemployment, the labor market, GDP, and it wants to see what type of impact it is having. And it's going to be data dependent. And so if we see that inflation is rising and it's increasing, will the Fed cut rates at that point? Probably not. And think about this for a second. Let's say that inflation skyrockets back up to where it was after all that money was printed during COVID. Would the Fed have to raise rates? And could you imagine that? We dropped 21% off of these tariffs. What type of decline or drop could come if the Federal Reserve raises interest rates? So that's something to think about. And you know, there's a question out there too. Will the Fed bail out Wall Street? And is Main Street screwed? right? So this is going to be again, I described this as a soap opera earlier. It's a soap opera that we're going to have to watch unfold here over the next few months. And so what is going to happen? What's the most likely outcome for this? It's unknown. And if you know anything about the markets right now and what is occurring, we are in a period of unknown. We are in a period of uncertainty. And the Fed's position only adds to that and intensifies it. And so what happens, you have the pressure from tariffs and the unknown impact of that on the economy, on the consumer. And you have the Federal Reserve, who is uncertain about the tariff uncertainty, who does not and is not willing yet to cut rates or to take a step with quantitative easing. And so you have uncertainty there. So you have really uncertainty coming from two different areas. And it is not good for the markets. It puts downward pressure on the markets. But keep this in mind. What you want to pay attention to is the data that comes out over the next several months, because these tariffs have now had some impact. We're on this pause here, but they are in place in China now. Look at the inflation reports. Are we seeing inflation tick higher? Are we seeing it decrease? And that's going to let us know, hey, there's enough of a decrease here in order for the Fed to be able to prudently cut rates. So pay attention to those inflation rates. Pay attention to the data coming out in terms of employment. Is employment increasing? Is the unemployment rate dropping, or is it increasing? And that's going to give you some insight into the health of the labor market. That's something that the Fed is going to be watching as well. And so the ultimate takeaway here is it's more uncertainty. And we know uncertainty is not a good thing for the markets. And so from my perspective, and as I've talked about in previous episodes, especially with earnings, the uncertainty is going to continue to put downward pressure on the economy, downward pressure on the markets. And more than likely, the outcome from this is that we have lower to go. I published a recent video about where we could head on the SPX in terms of lower support. And we do have support down below us. I'm looking at 4,200 as a price area where a bounce could come in, maybe a bottom from all of this if we continue to go lower, but who knows? But again, uncertainty is not good for the markets. It's going to put downward pressure, but make sure you're paying attention to this narrative of Powell versus Trump. Pay attention to what the Fed is saying, pay attention to the data, and that's going to give you clues and insights to where the market is heading. 3, 2, 1. So that's going to do it for episode number 52 of the Traders Podcast. Smash that subscribe button and let me know down in the comments, what will the Fed's next move be? Are they going to hold tight? Are they going to cut rates? Will they move into quantitative easing? I would love to know your take on that. Put that down below, and I'll see you back here next time for a brand new episode of the Traders Podcast. Make it a great day.